Good morning, everyone. Welcome to this morning's webinar. I'm Sophia, responsible for curating learning events for you at Spectrum. So today's webinar is on Fintech. How is robo-advisory changing the investing landscape? So before I introduce the speaker, let me share a little bit about Spectrum. So a little bit about us. Spectrum is part of the Golden Equator Group. We are centrally located at Duo Tower, Bugis, Singapore. So we promote a learning-focused culture for the business community, and we provide curated premium workspaces for you to work from. And we offer meetings and event solution all at one place. We also provide the access to connections and resources to expand your business. So coming soon for learning. So we have programs curated for these different audience as well. So Pinnacle Executive Learning programs, which are for corporates, business leaders, and managers, where we create an immersive experience and reimagining learning. So Pinnacle Next Gen, we empower next gens from ultra high net worth families beyond economic leadership, and programs under the Pinnacle Entrepreneurship to help bring entrepreneurs' big ideas to fruition. I'd like to welcome Ying. Thank you for joining us today. Ying is a wealth advisor in the StashAway Singapore office, handling investment advisory to the high net worth clients. She led a team of 20 as a client engagement team lead at StashAway previously, serving clients in Singapore, Hong Kong, and the UAE region. Ying is a licensed representative with the Monetary Authority of Singapore for Asia Wealth Platform, the legal entity of StashAway. So audience, don't miss out on this opportunity to ask and post your questions onto the platform here. So they will be addressed after Ying has done a presentation. So without further ado, and over to you, Ying. Thank you.
Thank you so much, Sophia. Thanks for the introduction. And good morning, everyone. Thank you guys so much for being here with us today. So in today's session, I'll be sharing on my views on the future of investing and also going through what the current trends in the market are, as well as where we were about 5 to 3 years ago. So my name is Ying and I'm a wealth advisor at StashAway. The content that I'll be sharing with you today is strictly meant for educational and informational purposes. So if you have any questions, feel free to post them in the Q&A box. I will get to them at the end of the session. About what I do. So I'm mostly doing advisory work for the high net worth clients on the platform starting early this year. So when I first joined back in 2019, our tagline was actually intelligent investing like it should be. However, fast forward 2.5 years later, our current tagline is actually wealth management like it should be. So in the past 2.5 years, StashAway, aside from introducing investment products to our investors, we have also ventured into insurance tech. So you can actually purchase term life insurance within the StashAway app itself for the Singapore region. And apart from that, we even have a financial planning tool within the mobile app where you don't even have to be an investor with StashAway. You can access this financial planning, this retirement planning tool where you can have different inputs of all your current assets. And then from there, we will have an algorithm to help you calculate how much you will need for your retirement. If you indicate, let's say I need $3,000 or $5,000 at age 50 years old, if you plan to retire early. So this is just some ways of how we want to be a holistic platform. And ultimately, what we aim to do is to become the principal wealth management platform for individuals across the Singapore, Asia Pacific region, including Middle East and North African region. So to begin, what is a robo-advisor? So when I speak with clients, some of them, I would say about 10, 15, 20% of them sometimes have a misconception that the robo in robo-advisor means that, is robots investing my money for me? Are we using artificial intelligence to manage our clients' funds? So that's actually not true. Basically, a robo-advisor is a digital wealth platform that uses automated solutions, algorithms to help our investors manage their funds. So basically, we leverage on technology to be both time and cost efficient. And ultimately, we pass on these savings to our investors and consumers on the platform. So a quick run through of how a digital wealth manager works. So ideally, the sign up process is very quick and simple. On the Singapore platform itself, you can sign up using SingPass. So you don't even have to key in much information, since all the information will be verified by SingPass anyway. And then we will ask you a series of questions, usually questions like, okay, have you previously had any investment experience? If you study finance, banking, and accounting in higher tertiary education, and whether you had experience working in the financial services industry in the last 10 years. So a fun fact is that actually 25% of our assets under management comes from people working in the financial services industry. Because I know there's this myth out there that, you know, digital wealth platforms are meant only for beginners or people who had no prior investment experience. So that's actually not true. And number three, based on the input that you entered within the app, in this case, the algorithm will tell you, okay, based on, you know, your risk tolerance that you told us, these are the recommended risk index, and we recommend you do not go above this in order for you to meet your goals. And then based on, you know, the portfolios and the inputs that you share, we'll recommend different risk index for your profile, and then you can start making your investments through mobile banking or iBanking platforms. And a good digital wealth manager would also definitely have automated rebalancing for the portfolios. In the past, traditional financial institutions and financial advisors would have to meet up with their clients on a quarterly or twice a year basis to help them rebalance their portfolios. But with, you know, a digitized platform, it's actually done automatically. So a quick list of the pros and cons of a digital wealth platform. So ideally, they have a mobile app, and it makes it very easy and convenient for you to access it 24/7. There's usually no minimum deposits, no lockup period, no entry fees, no withdrawal fees, and, you know, you can withdraw your funds at any time. So typically, the fees from a digital wealth platform is much lower than a traditional financial institution, and most of them utilize on index funds to provide passive investing as well as diversified portfolios overall. However, the cons of it is also because of its digitization. You don't have a human advisor to advise you. So it does not include estate planning or legacy planning in this case, and you cannot, you know, pick and choose your portfolios or what goes into your portfolio as well. It's not as customizable, and depending on the amount that you put in, it may be more cost efficient for you to actually invest yourself through a brokerage or trading platform. So that will depend on how much capital you have. So are robo-advisors safe? I think when I first started in 2019, back then, very few people have heard about StashAway or robo-advisors because we were the first to be licensed in Singapore. The number one question, I would say 40% of my clients asked me was, you know, what happens if StashAway goes bankrupt? What will happen to my money? So for StashAway, we hold a capital market services license. So what that means is that all of our investors' funds are kept strictly in a custodian structure. So, you know, we can't, it's not intermingled with our company's finances. And even if StashAway goes into debt, we can't simply just liquidate our investors' funds to pay off our debts. That's definitely not possible. So fast forward to the past 1 year, this conversation about, you know, whether robo-advisors are safe has thankfully gone down quite a bit. And I would say it's also for a few different reasons. I think the competition in the Singapore market is heating up. There's, I think the last I calculated, more than 10 robo-advisors players in Singapore. And if we look at the 3 local banks, each of them actually have their own robo-advisory division. And that actually is, giving us a head nod that actually what we are doing is the right thing. And there seems to be some form of fear of missing out on their end. That's why they had their own robo-advisory team to help serve the market. So I think having that type of competition is very healthy. and it also validates how our digitized structure is actually working for the investors and the consumers in the market. So, all our assets are held strictly in custodian structure. In this case, securities are held with Citibank. Securities are held with HSBC, and our cash is held with Citibank. So a little backstory of how I joined StashAway. When I was doing a stint about 7 years ago in the US, and that's when I first heard about robo-advisors. So in the US, you have big players like Betterment, Wealthfront, and in fact, Betterment actually reached unicorn status sometime last month, so very relatively recently. So I remember thinking to myself back then that, okay, robo-advisor, that's very interesting. It's potentially a game changer, how you are democratizing investments for everyone, the mass market. And back then, most of the funds in Singapore, I understand, were only in unit trusts, mutual funds, whereas these platforms were advocating for index funds, passive investments, exchange traded funds. So I was thinking to myself, okay, I think it will take some time before Singapore has similar technology, similar company. So fast forward a few years later, actually a friend invited me out for coffee, and we were just chatting, and then he actually whipped out his phone and then showed me that, okay, actually I have a StashAway account. It's very interesting. I've always been interested in personal finance. He told me to check it out. So I looked at it. I did not create an account. I went to the careers page instead and actually looked for a job opening. Of course, I did my due diligence before I actually applied for the job. I was looking at the founders' past experience. So the co-founding team is actually made up of people with decades of investment, technology, and management experience. And like what Jack Ma said, in your 20s, you want to be following a leader, someone that you can learn a lot from. And that's what I know I wanted back then. So the team is led firstly by Michele, who actually is the CEO of StashAway. So he has 18 years of experience building internet companies, and previously he was the ex-CEO of Zalora. So actually, how StashAway came about was Michele was earning a decent amount being the CEO at Zalora, and then he wanted to invest his savings somewhere. However, his private bankers, his relationship managers were mostly offering him high cost fees, mostly unit trusts and life insurance policy, which are usually the most lucrative products for that distribution channel. So the pain points that he himself experienced was, there's not much affordable options in the market, cost-effective options that, utilizes on intelligent investing. So most of them were inconvenient, not transparent, and the offerings they offered him were standardized and basic. Basically, whatever they offered him, they will offer the same flavor of the month to the next guy that they had an appointment with. So in order to tackle his pain points, he actually met up with Nino, who's the Chief Tech Officer at StashAway. So he also has 18 years in building up technology companies. And most recently, he was the founder and CTO at Personio, which is a HR management software company. It also recently reached unicorn valuation status. So Nino is actually also very familiar with the robo-advisory scene back in Europe. So he was based in Singapore at that point in time, and then they met up, and then, okay, you have the management part settled, the tax part settled. So now they need to find a guy that has experience in managing money. So they found Freddie, who has more than 2 decades experience in cross-asset investments and portfolio management. And previously, he was the managing director at Nomura. So the three of them came together to tackle the existing pain points Michele was facing, and he was sure a lot of other people were also experiencing at that point in time. So how does digital wealth platforms or even StashAway tackle these pain points? The first one, that it's inconvenient and not transparent. So Ideally, most of them have a mobile app where you can access it 24/7. There's automated rebalancing, like I previously mentioned. And because it's your funds, there's no lockup period. You can withdraw your funds at any time, whenever you like. And you can adjust your portfolio at any time, or you want to make a transfer in or withdraw out, that's also entirely up to you. I remember 7 years ago, I was mostly invested in unit trust because back then I was a university student, and I could only do so through my financial advisor. Any withdrawals, deposits, or any changes in the funds, I had to go through my financial advisor. So it was more difficult for me back then. But of course, there's different types of investment platforms or trading platforms that you could utilize. So one unique value proposition of StashAway, I would say, because some clients ask me, there are more than 10 players in the Singapore market. What makes StashAway stand apart? Most of them have a mobile app that's accessible 24/7. Almost all of them offer automated rebalancing, all of this. What makes StashAway stand out? So I would have to add that what I personally think one of our unique value proposition is our extremely friendly client engagement team. So we are available 7 days a week from 9 a.m. to 6 p.m. So, even if you want to call us on a weekend, on a Sunday to talk about your money, definitely you are able to do so. And I'm not sure when was the last time you guys actually tried calling your bank. I did it last month, and it was a pretty painful experience. I'm sure you guys have gone through it. You call in, there's this automated voice message that tells you all of the agents are not free at this point. You just have to wait. And then there's the annoying elevator music, and then you just have to keep waiting. And then usually I have to wait at least 10 minutes before I get to speak to a real human being, right? For StashAway, when you call us, between 9 a.m. to 6 p.m., our average pickup time is less than 10 seconds. So, ultimately, this business is not just about investments. It's really a business of trust. You trust us to take care of your money, and if you want to speak to a real human being, you can definitely get to do so in less than 10 seconds. So if you don't believe, try it out. Go to our website, look at the contact hotline, and then just give us a call and ask questions. So the next pain point is that it's expensive. So specifically, if you are asked by the relationship manager at your bank, typically the products they offer you are unit trusts, which have really high fees. So typically the initial charge is about 5%, and then the annual management fee that they charge is about 1 to 2% per annum. So if you do compare, let's say you're putting away $2,000 every month from your monthly salary in an investment portfolio that generates 6% annual gross returns. So if you compare investing this money with StashAway compared to similar, a unit trust that I mentioned, ultimately you will have more than $600,000 in terms of returns if you compare just in fees alone. Of course, we're not saying that you have paid $600,000 in terms of fees. No. So the difference in returns because of the fees you've been paying actually does compound in terms of missed returns, and it adds up to $600,000 at the end of 30 years. And that's a lot of money. And the last pain point is that the offerings out in the market is standardized and basic. So the industry today is focused on selling managed funds one by one. And by utilizing on technology, we can help distribute these investment products directly to the consumers through a self-service platform. So for StashAway, we bring institutional level investing brought to retail investors. In each portfolio or the basket of ETFs, you can have up to more than 10,000 securities exposure. And then we use a investment framework is based on economic regime-based strategy. So the reason why I'm showing this is I do have clients that ask me, okay, a robo-advisor invests in index funds. So why don't I just invest in these index funds myself? Why do I have to go through you? So I would say it's mostly, our unique value proposition is from our investment framework as well. So I will just briefly go through on the three different pillars of our investment framework. So number one, it's economic regime. So in this economic regime-based asset allocation, based on the macroeconomic data points that we receive, where we look at the relative rate of change between economic growth and inflation rate, we will determine which economic regime we're in. And past studies have found that asset allocations actually drive returns in the medium to long run, and not securities selection. So basically, it's this entire idea based on economic regime, which I will go through more in depth later. And then number two, managing uncertainty. So when the economic data points are not very clear, in this case, our strategy will actually move into what we call a all-weather strategy. So it's very similar to Ray Dalio's all-weather portfolio, where you have a mix of protective assets and growth-oriented assets to be a sort of a balanced portfolio that will be robust enough to have risk-adjusted returns in different types of uncertain economic conditions. And number three, we also, one of the pillars is that we look at valuation adjustment. So if any particular asset classes is deemed to be overvalued, we will actually try to seek for opportunities in the undervalued asset classes in order to drive medium to long-term portfolio returns. So I'll also quickly go through on part one what I mean. So these are the two axes that we look at to determine economic regime. So firstly is the inflation axis as well as the economic growth axis. So in times of low inflation and high growth, which is actually what we are currently seeing in the non-US economies, as COVID, we are sort of managing COVID virus, and we are now moving into a new normal as more travel lanes open up and hopefully economies reopen. At this point in time, we are seeing that we are going through this. And then for high inflation and high growth is actually what we are seeing in the US economy, just because of all the money printing that they've been doing over the past 2 years. And low growth and low inflation, basically what we saw from March last year, when all the economies were being shut down and everyone was working from home, and not even a restaurant was open, and you definitely could not travel back then. And then for stagflation, the most recent example would be Zimbabwe in 2018 and 2019, where there's high amount of inflation and very low growth, making the market conditions very uncertain in this case. So in the middle is the all-weather strategy, where if the economic data points does not suggest we're in any particular regime, particular economic regime, we will actually have a bit of protective and growth-oriented assets to manage the uncertain climate. So how does return change with the economic environment? So in this example here, I'll be looking at the equities market using example of S&P 500. So during a recession of low growth and low inflation, typically investors would not want to invest in the equities market. So you will see, typically negative returns in the market. And then during times of high growth and low inflation, equities market will tend to do well, as what you see year to date. The S&P 500 is up, I think, 23% today. And then in times of inflationary growth, there is high growth and high inflation, such that the real growth is actually tempered, tamed down by the high inflation rate. So real growth is actually less than the growth we see. And then during times of stagflation, because of how uncertain it is, the equities market tend to not perform as well. And all this compared to, let's say, fixed income, if we compare US government bonds 20 plus years in comparison, during recession, investors tend to flock to safer investment asset classes like bonds. And during good times, people would rather invest in equities market than in fixed income assets. And during inflationary growth, because of the high inflationary environment, people do park their money in the fixed income asset classes as well. And lastly, in stagflation, usually you still have growth in the fixed income asset classes. So based on these economic data points, we will actually allocate our asset classes accordingly based on the economic data that we receive. So lastly, I would like to go through what the current trends in the market are, as well as the future trends going forward. So from Statista, the assets under management of all the digital wealth platforms worldwide is projected to reach US $1.4 trillion in 2021 this year. And in 2025, this figure it's projected that we will reach assets under management of US $2.8 trillion. So for StashAway, earlier this year, we announced that we hit our milestone of managing assets of more than US $1 billion. And, this is barely scratching the surface. And especially in the Asia Pacific region, in Asia, 46% of financial wealth is actually held in bank deposits compared to 14% in North America. So, and especially in the last 10 to 20 years, we also see a rise in the mass affluent market segment. So mass affluent is typically defined as individuals who have between US $100,000 to US $1 million in terms of financial wealth. And they make up, they actually own 47% of wealth in the Asia ex-China region, Asia ex-China market, which totals up to US $12 trillion. So as you can see, we are really barely scratching the surface, and there's a lot more room to grow. And like what Michele always tells us, we are still in the beginning days of this marathon, right? So two future trends we see going forward. Number one, that technology digitalization is definitely here to stay. So technology is definitely here to stay. When I speak to a client who is 30 years old, regardless of his wealth, he or she would rather use digital interactions on a self-managed app. But when I speak to a 70-year-old investor, regardless of wealth, both of them would rather speak with a human advisor. There's also this myth that that the investments on a StashAway platform is mostly done by retail investors. So that's not true. 20% of our assets under management are actually from our high net worth clients. So technology digitization is definitely here to stay. And number two is that we would see more the use of technology further up the value chain in this case. So I think what I've mostly mentioned is the distribution part of the value chain, where you can do it yourself through a mobile app. But what we see is that it will go further up the value chain. You could have the passive versus active investments debate, the research analysis, the investment team behind. They could all be sort of overtaken by technology in this case. And the front end, relationship managers or bankers or even wealth advisors like myself, you will definitely see less of them going forward, and you will have more engineers on the payroll that will help automate the investment process and the entire value chain. Yeah, that's the end of my presentation. So let's go to the question and answer.
Oh, thank you, Saying. That is very in-depth information for us. So I would urge the audience, if you have any questions, take this opportunity, post onto the platform here. All right. So I have a few questions for you, Saying.
Yeah.
So the rule of investing as well is that EQIC was set in, right? So what happens? So how does EQIC work on the platform? Perhaps you want to share with us. Yeah.
Yeah, sure. So really depends on the region, right? In Singapore, you can verify your information through SingPass, which makes the entire process a lot more seamless and a lot faster and easier. So at this point in time, we are in the midst of looking for an eKYC vendor. Right. So right now, when someone syncs their SingPass information, we still have our team to do manual checks to make sure the information checks out. But definitely going forward, it will simplify the process a lot more. And usually, account opening takes about 1 business day. But with eKYC, it takes 15 minutes as soon as you click through your information. So I think that would be great.
Great. So I'm not a robo-advisor user yet, but I'm looking at it. Then what happens if, let's say, I don't meet the criteria that you have in terms of the requirements right now?
Okay. What type of requirements are you referring to?
There is definitely a certain appetite that in an investor that you're looking for. So what if or is it for everybody?
It's really for everybody, I would say. So fun fact, the oldest investor on our platform is actually 90 years old. So obviously, I mean, based on the information that we verified, we would actually have a risk cap for his portfolios because he is above a certain age. And then based on the information that you put in, we may have certain caps on the risk level that you can take. So I would say our core portfolios is really meant for everyone, and it's actually classified by the StashAway Risk Index.
Right. Okay. We have a question here. Nicholas, thank you for your question. Are you planning to add cryptocurrencies to your platform? Interesting question.
That's a great question. Yes. So a lot of, the rise in cryptocurrencies in recent years, I think there's a lot of interest and buzz going on. So for a passive investment platform like StashAway, at this point in time, we are not looking to add cryptocurrencies because of its high volatility. With that said, we actually recently launched our thematic portfolios. So one of our portfolio is called the Technology Enabler, where we actually invest in blockchain technology, blockchain infrastructure. So not in cryptocurrency still, but there is a form of proxy investments in the blockchain tech that is underlying all the cryptocurrencies that we currently see.
Great. Okay. So thanks, Nico, for that question. And then there's another question from the attendee. Thank you for sharing and asking from the perspective of someone with a low risk appetite. How or which StashAway accounts, general investing, income portfolio, or StashAway Simple would you recommend starting with, or what are the percentages for each portfolio?
Okay, so that's a great question. It really depends on different factors. Number one, your risk appetite. Also, number two, what your investment time horizon is. So for the general investing portfolio, that is our flagship product. The general investing portfolio is a globally diversified portfolio. So I would recommend for you to start off with that first. And you will notice that all of our portfolios we classify using the StashAway Risk Index. So typically with most fund managers or some unit trusts that I see, they will rank that, okay, this is the risk. We rank it 1 to 10. However, and 1 is being the lowest risk and high is being very aggressive. However, what we find troublesome with that type of methodology is my aggressive would be very different to a 90-year-old's aggressive level. So we avoid using words. Instead, we quantify our portfolios. So let's say a StashAway risk index of 16%. What it means is that in any given year, there is a 99% chance that the portfolio will not lose more than 16% of its portfolio value. So basically 16% is the maximum drawdown at a 99% confidence interval. So for example, if you put $10,000 inside, in a given year, you can expect that this portfolio will not go below $8,400. So in this case, I want you to consider your risk appetite before you create the portfolio. If you're not sure, you can feel free to drop a WhatsApp message. There's this WhatsApp button on the app itself that you can chat with our agents and clarify any questions you may have. So definitely consider your risk appetite in this case. And regarding the percentage, I think that would depend on your overall portfolio as well. If you like, you can actually drop me an email, then I could speak with you and discuss further. Can I reveal my email address, Sophia?
Yeah, that's fine.
Okay, yes. Drop me an email at sing@stashaway.com, and I'm happy to set up a meeting to discuss further, so that I can further discuss.
Okay, and I'm happy to bridge the connection if anyone has as well. So at the end of the webinar, we have a feedback form, so you can drop your name and your contact details. I will reach out to Ying as well. So keep those questions, good questions coming through. So Sim, thank you for your question. Earlier, when you were talking about the pros and cons of utilizing robo-advisors versus using a human advisor, you mentioned it depends on how much capital you have. So perhaps Ying, you can shed some light. Does this mean if you have a lot of capital, we should go with human advisor?
Okay. So actually, in that slide, I was discussing about the pros and cons of investing through a robo-advisor compared to doing it yourself through a brokerage platform. So typically, when you invest on a trading platform yourself, you only need to pay for the transaction fees and not the management fees. So usually there is this, if the trade is large enough, it will actually be more cost efficient if you did it yourself. So I'm not referring to a human advisor here. The human advisor, of course, depending on their payment structure. Most of the human advisors we see in the market out now, they are incentivized to sell you products that would benefit them, right? But if you are looking for a fee-based advisor, he or she could look at your current asset allocations in your overall portfolio and maybe advise which particular index funds or mutual funds to invest in. And if you have a large enough capital, you can do it yourself on a trading platform. Then that would be the most cost efficient for large amounts.
Great, thank you. And an anonymous question from someone anonymous here. Thank you for this discussion. I wanted to ask, how does your own investing portfolio look like? Great.
That is a great question. So personally, I have more than 50% of my money with StashAway. Not because I'm a diehard super StashAway fan that is blind to all reasons or whatever. It's mostly out of convenience, because as a licensed representative with MAS, I have to declare all my trades to the compliance team every week for trades executed in the past 7 days. So it's pretty cumbersome for that. So when I speak with clients every day and I talk to them about the benefits of StashAway, I do think it's a good enough platform for most people that's out there. So personally, I have a few portfolios set up. Number one, my retirement portfolio. So personally, because I'm still very young, I have a long investment horizon for my retirement portfolio. So for that, I actually chose the highest risk of 36% risk index. And then next, I have a portfolio that's more medium to long term. I don't know what I want to do with the money yet. Maybe I would like to start my own business in 5 years' time, or I want to buy a house in 3 to 5 years' time. So for that, I chose a medium, more balanced risk, which is 22% risk index. And then number 3, I actually have a portfolio set up for my niece that was actually 4 months old now. So my idea is I'll put in some money for her, and then when she turns 18 years old, she can do whatever she wants with the money. So it really depends on your investment timeline and your risk appetite for each of the portfolios that you set up. Thank you, Anonymous, for that question.
Right. So Sim has another question. With all investments, there is a possibility of loss. Is there a possibility of losing all my money when I invest using a robo-advisor? I think you've covered this as well. Perhaps you can share this with Sim again.
Sure. So the possibility of losing all your money is very, very extremely low in the case of a robo-advisor, just because we invest in exchange traded funds, right? So the exposure to, you have exposure to thousands of companies, unless all thousands of the companies all go down at the same time, then you will lose all your money, which that is very, very unlikely, because in a well-constructed portfolio, it is diversified enough that even if any particular company goes bankrupt, you still have others in the sector, in the area, or different other asset classes to balance out the risk. So I would say the possibility is very, very extremely low in this case. So I always bring up the example of the StashAway risk index, which is a 99% confidence interval. So maybe I'll give you a more concrete example. For example, you chose the 20% risk index portfolio, and you created your account on 1st of January last year. So fast forward 3 months later, there was a much market crash, worldwide. It was a recession. So if you invested in the 20% portfolio and you put in $10,000 in January, you will have seen your portfolio go to $8,000. So that was, sort of one of the worst case scenario already. A black swan event like COVID hitting all the portfolios.
Okay. So about the current product that you have, I think with StashAway Simple, there's a guarantee of 1.2% per annum.
Okay. So yes, for the StashAway Simple, it's actually a money market fund. We are invested in money market fund. So it's a cash management portfolio. So it's not a guaranteed 1.2% in this case. It's actually a projected return of 1.2% per annum. So
Okay.
not guaranteed.
Okay. Thanks for all these questions. Fantastic. So next, how do you tell if certain ETFs you are invested in have too high valuations, and what will you do to change that?
Okay, so a recent example, the common metrics that we use is price to earning ratio and price to earnings to growth ratio, PE and PEG ratio in this case. A most recent example is that a few months ago, we actually increased the allocations toward the Chinese tech sector because what we saw was that, historically the PE and PEG ratio is at its 5-year historical low, right? So price to earnings to growth ratio. And then compared to the US tech sector, where the price to earnings to growth ratio is actually very high, much higher than the Chinese tech market. So that's why we actually changed our asset allocations to move out from the US tech. We weren't very heavily invested in US tech, but whatever we had, we moved out, and we held it in the Chinese tech sector to take advantage, that 3 to 5 years down the road with China and their 5-year tech plan, that they are trying to become the next Silicon Valley with increased R&D spending in 5G network, 6G network, semiconductors, etc. We see there will be a lot of potential upside in this sector.
Thank you. What's an upcoming industry that you're looking into investing in?
Yeah, that is a really great question. So I think, even before COVID, right, there has been a lot of buzz regarding biotechnology. And if we look at how the human life expectancy has increased from, my grandparents' generation or great-grandparents' generation to what we see today, it has, we have come a long way. And, they are not talking about, okay, if, everyone living to 100 years old is the standard going forward. And, if you retire at 50 years old, you have 50 years of golden years of play left. So personally, I'm very into the biotech sector. And of course, with COVID here, you hear about all these revolutions in all these technology for the to come out with vaccines for the virus, etc. So that's something I'm very interested in, and there's some interesting articles out there that you can take a look into as well.
Right, thank you. I want to go back to question on demographics. So basically, I'm not surprised if millennials are, are the customers. So basically, they're mobile ready, they're born in the digital world as well. And then older investors, I see that there's a trend in a news report as well that many of them are also taking up robo-advisory. So maybe you can shed some light on why so. Is it because of the pandemic, or you see that trend and appetite changing?
Yeah. So definitely, I think the appetite in being more digital was largely driven by the pandemic. A lot of my customers, previously we would hold face-to-face meetings, but now they have to figure out how to, do Zoom calls and then unmute themselves when they talk, etc. So this being more tech savvy, adopting digitalization is definitely one of the key trends. And there's this misconception that digital wealth platforms are largely from millennials investing. So on StashAway itself, actually more than 50% of our assets under management comes from investors above 35 years old. So I would say overall there is this trend that goes into digitization.
Okay, great question on NFTs. So what would be your personal opinion on NFTs? Is it something that you would try investing in?
I think that's a great question. There's this buzz regarding NFTs or non-fungible tokens at this point. So personally, for me, I'm not at that level yet to invest in NFTs, because to me it's more of a collectible. It's as if you're collecting an art piece, etc. Personally, I'm still in the age of trying to accumulate as much wealth as possible. I don't have that spare amount to invest in a collectible as yet. But who knows, maybe 10, 20 years later, I would want to own something really fancy that I can show off to all my friends.
Do you foresee StashAway moving towards NFTs as
well? Not at this point. Not in the
future. All right. So did I see another question? Sorry. Okay, so what are the developments and growth for StashAway the next, say, couple of years?
That is a good question. So, so StashAway, we are 5 years old this year, and right now we are live in 5 different markets. So we started out in Singapore and Malaysia, where we were the first robo-advisor to be licensed in our particular countries. And then in the past 1 year, we actually did a massive country expansion into the UAE, Hong Kong, as well as most recently in Thailand. So going forward, I think we would be establishing deeper roots into these 5 countries we're already live in. So that means you can look forward to more products, more product offerings, not just in investments, I think, because I mentioned that insurance tech is available in the Singapore platform right now, but not in the other regions. So we are looking into adding more offerings, more value to our investors on the platform.
Right. Okay. Some light-hearted, question here. So instead of funny, perhaps a good learning point for all of us. So from your interactions with clients while working at StashAway, so perhaps you can share with us some of the key learning points or interesting feedback that they have using StashAway with you.
So I won't say funny, but I feel very fortunate in my position, where I do spend quite a fair bit amount of time talking to people every day regarding their investments, their money, their portfolios. So personally, I find it really interesting how different people actually manage their money. So most recently, I actually spoke with a model based in Singapore. So we don't have much models here in Singapore. So she mentioned that when COVID hit last year, there was the first time in her life she felt scarcity, right? She saw 60 to 70% of her income drop because there were no more events, no more gigs for her to host. And then she felt like, okay, I need to wake up, I need to manage my money. So we are looking at a early 20-something year old being determined to manage her finances and not let external circumstances affect her lifestyle in the future. So I think that was very responsible thing for her to do. And I mean, it's just very interesting from my position to see, okay, even if you are earning a high income, it may not necessarily mean you have a lot to set aside for wealth accumulation. If you have high income, you may spend a certain type of lifestyle, and then you may be spending a bit more compared to, let's say, someone who's not earning as much and is a bit more frugal and might have a higher net worth than someone who's earning a high income. So that's all very interesting for me to see. So I think one advice I always tell, no matter to whom I speak with, is the concept of lifestyle inflation. Because when you tend to earn more, you tend to spend a bit more, and it never stops, right? So I mean, it's important to reward yourself, but still, it's good for you to set aside some funds, more funds to actually hit your investment goals. Maybe you want to retire 1 or 2 years earlier, or have more money set aside for emergency or rainy days.
Okay. Right. So what are most people looking into investing these days, the industry that's garnering the highest amount of attention in recent times?
I think that's pretty subjective, but what we definitely see on the media headlines every day is cryptocurrency. So that's in my opinion, that's generating the most buzz. And that's why we also have the thematic portfolios I mentioned. Unfortunately, it doesn't invest in crypto because it's too volatile, but it invests in the underlying technology, which is blockchain technology, blockchain infrastructure, which I personally believe would shape the way we work, we interact in the next 10 years.
Okay, so audience, if you don't have any further questions, perhaps Ying, I can ask you to sum up, or any key messages you want to give to our audience before we sum up for the day.
Yeah, sure. So, I mean, one of the reasons why I personally joined StashAway was I really believe in the idea of democratizing investments for the mass market. Previously, the access was not made readily available to most people, or a lot of people are very afraid of hearing about investments, especially if they did not previously study business or finance in school. Those are the people that are a bit more afraid of getting into the world of investing. So, with the rise of digital wealth platforms, we are having that conversation about money, which is very important. Even though it's a bit of a taboo, but having it out there when you facilitate a conversation, which is very important. And a lot of the digital wealth platforms, we have educational messages like webinars like today's, or weekly webinars, or informational videos in the app itself, where you can learn more. So other than investing and having your money compound over the long term, I think the idea of having your knowledge compound over the long term is also very important. If you start now, there are things you may not know, there's some little jargons here and there, but as you get more familiar with it and you read more and you Wikipedia it or Google it, then as you learn more, you would slowly build up your knowledge. And I think that's important, or even more important than the part about making your money work hard for you and having that compound over time. So yeah, I think that's about it.
Okay, thank you. So I've just dropped the feedback form link here for attendees. You can fill that up while we have. So saying, I think, right. So great message here. Thank you for sharing all your professional and personal insights on investing and robo-advisors. I echo that as well. Thank you, Saying. Thank you, StashAway and Chirshun on the background for making this webinar happen today. I'd like to thank the audience as well for joining us this morning, and all the fantastic questions that you have put forth. So I'm happy to bridge the connection with StashAway if you'd like. And please help us to fill the feedback form when you exit from this webinar. So a lot of learning programs and platforms that you can reach us. So look forward to, for finance practitioners, you can look forward to a lot of programs coming up for you as well in November. So, and yes, thank you. Very, very interesting and informative. So this is very encouraging from our attendees for today's webinar. So everyone, have a good day today. Stay safe and stay well. And to you too, Saying and Tishan.
Thank you so much, everyone. Thank you, Sophia, and everyone who attended today. Thanks, Tishan. And
Okay.
see you guys soon.
Keep
Bye-bye.
connecting. Bye-bye. Thank you.